This man paid insurance premiums for 17 years. He never missed a payment. Then one accident changed everything. His claim was denied because of a single sentence hidden deep inside his policy. If you live in the United States, this video could save you tens of thousands of dollars. Insurance is supposed to protect you, but every year, millions of Americans have their insurance claims denied. Not because they lied, not because they broke the rules, but because they didn't know how insurance companies actually operate. Today, we're breaking down 10 of the most common insurance claims Americans get denied, and exactly how people legally fight back and win. After a car accident, insurance companies often rush to settle quickly. They may sound friendly and helpful, offering you fast cash to close the case. What most people don't realize is that the first settlement offer is usually far lower than what the claim is actually worth. In many cases, it's 40 to 60% less. Insurance adjusters record your statements, looking for anything that can be used to minimize your payout. People who win these cases usually do one thing differently. They never accept the first offer. They seek medical evaluation before settling and document all injuries, even minor ones. When injuries worsened later, those records become critical leverage. Home insurance claims are commonly denied under something called wear and tear. After storms or heavy rain, insurers often claim the damage existed before the incident. Homeowners who successfully overturn these denials typically hire independent inspectors rather than relying on the insurance company's assessment. Engineering reports and professional inspections frequently reveal storm-related damage that insurers try to ignore. Appealing with this documentation changes the outcome in many cases. Health insurance denials often come from out-of-network charges, even during emergencies. Many Americans go to the nearest emergency room believing everything is covered, only to receive massive bills. Later, federal law now protects patients from surprise medical billing in emergencies. People who win these disputes file formal appeals, citing emergency care protections, and demand itemized billing. Persistence matters here, and many denied claims are overturned after multiple appeals. Underinsured motorist claims are another common denial. When the at-fault driver has minimum coverage, insurance companies may act like there's nothing more they can do. But many policyholders don't realize their own insurance can step in. Successful claims often involve stacking underinsured coverage or triggering additional policy benefits. The key is understanding your policy before the accident happens. Disability insurance claims are frequently denied because insurers argue you can still work in some capacity. Even if your job requires physical labor, insurers may claim you can do desk work. People who win these claims rely on functional capacity exams and vocational expert evaluations. These reports prove that working is not realistically possible, even in modified roles. Life insurance claims are often delayed rather than outright denied. Insurers may keep families waiting for months under the excuse of an investigation. In many states, insurance companies are legally required to process claims within a specific time frame. Families who file complaints with state insurance regulators often see sudden movement on delayed claims. Formal legal demand letters also push insurers to act. Flood damage is one of the most misunderstood insurance issues in America. Homeowners frequently assume flood damage is covered when it isn't. Those who win flood-related claims usually rely on federal flood insurance programs or FEMA assistance. Proper documentation and timely filing make a significant difference in approval outcomes. Some of the strongest insurance cases involve bad faith practices. These occur when insurers intentionally delay claims, misrepresent policy language, or ignore evidence. In these situations, policyholders may be entitled to damages beyond the original claim amount. Courts take bad faith seriously, and insurers often settle quickly once these cases are filed. Renters' insurance claims are often undervalued, especially for stolen items. Insurance companies may reimburse the lowest possible value instead of replacement costs. Claimants who succeed provide proof of ownership, receipts, photos, or bank statements. Replacement cost riders dramatically increase payouts, but most renters don't realize they have them. One of the most powerful tools consumers have is policy ambiguity. If policy language is unclear or confusing, courts often interpret it in favor of the policyholder. Many denied claims are later approved because insurers rely on vague wording that doesn't hold up legally. People who challenge these interpretations often win more than expected. Insurance companies depend on one thing: people giving up. They count on confusion, frustration, and fear to save themselves money. But knowing how the system works changes everything. If this video helped you understand your rights, make sure you subscribe for more videos that protect your money in your future. And remember, the most expensive insurance mistake is assuming your company will do the right thing without being challenged.